Good morning, Paul Georgie from Allendale. It's January 5th, 2011. The outside markets are putting some pressure on the grains here this morning. The dollar up 60 as we speak. Crude oil down 50 to 60 points. Gold is lower, and the stock market stock indexes are lower here this morning. We did have good news. ADP payroll data came out, showed that we had large increase in employment, which is certainly a good sign, and provided a bit of support for the stock indexes after that report came out. However, the grain market's under pressure here this morning again. Corn anywhere from 5 to 7 lower, wheat 5 to 7 lower, beans 3 to 5 lower. And as far as fundamental news, nothing really negative as far as the fundamentals go. We had Argentina ag minister come out yesterday, put the corn crop at 20 million metric tons versus 26 million, what's estimated now or previously. They did get some rain in Argentina here last night, and as we speak, there's some showers moving across. They had some locally heavy amounts, up to over 2 inches of rain. So enough to settle the dust, as they say, for a period of time. However, the GFS forecast took some of the rain out for the next 6 to 10 day period. And that should cause some drying again, because in most areas we didn't have a lot of rain, anywhere from a quarter to possibly a half inch, maybe 70 hundredths is the average rainfall over that area. We did have a lot of volume in the corn here overnight, over 15,000 contracts traded early in the March corn. So looks like somebody was dumping positions, and it would have to attribute that to fund selling here in the electronic session overnight. The Brazilian weather, pretty normal, I guess you could say. There's some areas a little wet, some a little dry, but overall in pretty good shape. We did have Turkey announced yesterday that they are going to tender for 300,000 tons of wheat in starting January 11th. So that should be a little bit supportive to the wheat trade. However, I think the main focus this morning is on money flow. Money flow, and we're hearing the word rebalancing being thrown around so much here lately that it is widely anticipated that the funds starting on Friday, the index funds, Goldman and Deutsche Bank, will start selling some corn and selling some wheat. Estimates circulating now are 4,000 contracts of wheat and about 8,000 contracts of corn on a daily basis for about 5 days. And it appears like some of this money flow has decided to exit the market ahead of that rebalancing that's anticipated. And also the pressure that we've seen yesterday and earlier, when you looked at the funds position, that their accumulation of positions over the last several weeks at the end of 2010, most of that increase in open interest and increase in long positions came from the public, and we've seen a lot of liquidation, call it profit taking, yesterday in the corn, soybeans, and wheat, and we're seeing some follow through there. We do have good technical support under the market in the corn at around the $6 area, and then again down at the $5.91 area. So somewhere in that $5.91 to $6, we should find some good support in the March corn. The soybeans get good support around the $12.50 area. So those are areas to watch here in the grain markets today. And if for some reason we would close below those areas, I think there could be some acceleration of and stop activation as this market would sell off. But overall fundamentals seem to be positive enough to hold this thing together, especially ahead of this USDA report on the 12th. The livestock trade getting hit with the selling pressure as well. Futures under pressure again yesterday. Cash markets were lower yesterday compared to Monday. We had 106 paid in Kansas on Monday. 105, 105 and a half was trade yesterday in a more wider spread area in the southern plains. The cutout values were higher. Choice up 171, select up 116. The hog cutout values were down 41. We're seeing a little bit of pressure there as hog supplies may have backed up a little bit during the holidays, and I think that's one reason why we're seeing some pressure in the cutout value there. Hog futures look like they have got maybe another day of downside pressure here. We still like the hogs from the long side and looking for a place to buy, and you need to stay tuned to Allendale's research on that, because we think long-term hogs look pretty positive from just a demand side on pork and the tighter supply of pork as we move forward. So if you got any questions, give us a call. I also want to remind you to stay tuned to Allendale. Rich Nelson, our Director of Research, is going to do a YouTube on the upcoming USDA report to give you some details, what we're looking for, and some of the things that he's looking for the USDA might do. So we've got that coming out either tomorrow or Friday early, so stay tuned for that. If you got any questions today, give us a call here at Allendale, 800-262-7538. We wish you a successful trading day. We'll talk to you tomorrow morning. Thank you.